This is wild, and you'll want to hear this. A wave of optimism is sweeping through US consumers, with nearly 48% now expecting stock prices to climb over the next year, a sharp rebound from earlier declines, and a level of bullishness not seen since the pre-dot-com bubble peak in 2000. This surge in confidence, reflected in an 11th highest reading on record, comes as fears of a market downturn fade, with only 28% anticipating lower stock prices, a drop of 18 points to the long-term average. The stock market's allure is undeniable, fueled by robust corporate earnings and a sense that the economy, despite its complexities, is still a safe bet for growth. Yet, this enthusiasm sits alongside a curious disconnect. Consumers are spending cautiously, with personal consumption growth limping along at a modest 1.4% annualized rate in Q2 2025, barely above the prior quarter's sluggish 0.5%. The economy's 3% growth last quarter masks a deeper truth. Net of trade distortions, real demand is barely humming above 1%, signaling a consumer base that's hedging its bets despite the market's roar. Meanwhile, the stablecoin boom is quietly reshaping financial markets, with these digital assets now holding a staggering $149 billion in US Treasuries, making them the 18th largest external holder. Since Q1 2023, stablecoin treasury holdings have surged 64%, while their market cap has doubled to $240 billion. This explosive growth could further drive demand for US Treasury bills, potentially pushing down yields as crypto becomes an unexpected heavyweight in government debt markets. At the same time, corporate America is doubling down on AI, with Meta and Microsoft alone planning to pour over $100 billion into capital expenditures in 2025, mostly targeting artificial intelligence. The Magnificent Seven's relentless AI investments signal a transformative economic shift, yet this fervor contrasts sharply with rising consumer pessimism about the labor market. With the gap between those seeing jobs as plentiful versus scarce shrinking to an 8-year low, the data hints at unemployment potentially spiking past 6%, a stark warning that clashes with headlines of robust job creation. This disconnect between bullish markets, cautious consumers, and a booming crypto AI nexus paints a complex picture of an economy at a crossroads, where optimism and unease coexist uneasily.